All right, how's it going, everybody? My name is Tim, and welcome to AMZ Fusion. This is video number 1 about selling on Amazon. Today, we're going to talk about entity formation. So, an entity is basically how you do business. Are you doing a business under your name? Are you doing business under an LLC, S corp, whatever it is? We're going to talk about that, what we recommend, how you set it up, and we'll go from there. So we just want to preface this. I am not a lawyer. I am not a CPA. So please take what we say as some general knowledge, and you should probably consult a business professional about doing this before you just run off and do it on your own. There's a lot of do-it-yourself entities out there like LegalZoom who can help you through this. It's more of a DIY approach. You don't really get much for legal advice. So I'd recommend spending just a little bit more money and probably talking to a lawyer or a CPA and have them assist you through the process. So there's a couple things, like I said, you can do business under your own name. That's called a sole proprietorship. You can start with an LLC, which is a second way to do this. And an LLC is a limited liability company. As it says, it's there to limit your liability. The next way is an S corp, which is a corporation. And then the last one is a C corp, which is probably a little bit much for what we're going to do here. So let's talk about the pros and cons of each. So a sole proprietor is the quickest, easiest way to get up and going. You can usually just register this at your local courthouse, and basically you register your business under your name. So my name is Tim. I'm going to be doing my business as Tim. And you can also register what they call a DBA, a doing business as. And what that does is you'll just say, hey, my name is Tim, and I'm doing business as AMZ Fusion. So it gets a true business name out there, but legally it's still being filed. Everything is going under your personal name. So the things you need to watch out for about doing a sole proprietor is the liability. And this is the biggest reason why I really wouldn't recommend doing a sole proprietorship, just because of liability. If you're doing this as a side gig, you're just trying to make a little bit of extra money every month to help pay bills or something like that, this might be easy, cheap, and way to get going. And again, not the recommended way, but it is a way to get going. So the biggest risk, though, is your personal assets. And what do we mean by that? So assets are anything that you own or have. And being personal, it's what you own or you have, or what your family owns or what your family has. So you need to watch out for doing business as a sole proprietor, because if you were to go to if you were to go to court and somebody was to sue you for getting injured from a product, you'd figure, oh, that's not my problem. It's the manufacturer that's responsible for it. But realistically, we live in America and we have what they call shotgun lawsuits. So basically, the person suing would sue everybody along the chain. They're going to sue the manufacturer. They're going to sue Amazon. They're going to sue you. Everybody that had a piece of selling that product to the customer will probably get named in the lawsuit. So personal assets come to risk. So theoretically, if you go to court, you lose your court case and they determine you owe the person suing you $100,000. Your personal bank accounts, they could possibly garnish your wages from your paychecks. They could take retirement accounts, all sorts of goofy stuff, depending on what state you live in and where you get sued. There are some laws to prevent certain things. Some states will have set up like a Homestead Act where they can't come after your house. Some states don't have that. And so it's really not recommended to do this type of setup, just because there's no reason to put your personal assets at risk. You can easily get into an LLC or an S corp and avoid that. That S corp or LLC will act as a shield to defend you from your business. It separates you from your business, so you are no longer personally liable. All liabilities are shifted to the business. So the next step would be an LLC. So an LLC stands for a limited liability company, and just like the title says, it limits your liability by using a company rather than your name. So this is by far a better way to go. It keeps your personal assets, again, from being at risk for your business. So all your purchases, all your product, all your inventory, you decide to buy a forklift, you buy whatever, all this equipment, computers, that all goes in the name of the business. And then the business assets are the only thing at risk. So if you take the words of Mark Kohler, he talks about some entities will only have very minimal stuff. So he's like, sue me, all you're getting is a laptop, because that's all the business owns. So again, it's that barrier that protects you personally from your business. An LLC is a great way to go. and is probably the bare minimum that we would start at building a business ourselves. An S corp is the next step up the chain here. An S corp is very similar to an LLC. The biggest difference is, for knowledge-wise, is the tax benefits. So again, has the same kind of division between you and your business, and there's a line that protects you from your business in case something goes wrong. The tax benefits usually start around the $40,000 profit range. And we're talking about $40,000 net profit. How much money are you going to take home at the end of the year? You're going to start to see some personal benefits tax-wise. So, and how does this work? So there's two ways you can pay yourself with an S corp. These aren't the same for an LLC. So you will pay yourself one way, which will be payroll. So you pay yourself, we'll make numbers kind of easy. You pay yourself, $25 per hour. That's about $50,000 a year. And if we'll take an example of, you made $100,000 this year, net profit, the amount you would take home, we would say 50% of that is going to go towards payroll. So you pay yourself $25 an hour, plus or minus, for about 2,000 hours a year. You take home $50,000. That $50,000 is subject to 15% payroll tax. So it's a tax that you pay the good old government for doing business. And then the $50,000, we'll just say for easy numbers, goes down to about $35,000. Then you have to claim that $35,000 on your personal income tax, on your, essentially through a W-2 like you would from your job. And that $35,000 chops down to whatever it is based on your tax bracket. So now that we talked about we took the first $50,000 out of the $100,000, and that was paid through W-2 income through payroll. So this second half of your money is paid through distribution. Distributions are not subject to payroll tax, and so you can save on $50,000. It's $7,500 on payroll tax. So that $7,500 goes in your pocket and not to Uncle Sam. So the S corp offers a decent tax savings as long as you are making, like I said, around $40,000 or more net take-home profit. So an S corp probably costs a little bit more money to file taxes. The money still flows through a K-1. So you have a W-2 for your payroll income, and then you're going to get a K-1 for everything else. And you'll be taxed again. The K-1 income still goes on your personal income tax, and based on your tax rate, you will still pay Uncle Sam their regular federal income tax. Business is actually taxed fairly heavily here. So the last option is a C corp. C corp is probably not worth going into. It's just like a bazooka for something that you don't need one. All you need is a knife here. So if you ever plan for this company to grow into a $50 million company that you're going to go public and try and have stockholders and stuff like that, a C corp would be needed for something like that. But realistically, we're selling stuff on Amazon. You probably way overkill to go into a C corp. Again, talk to your tax professional. They might convince you a C corp is a good idea, but realistically, it's probably not needed. And again, this depends on the state you're in. Not every state recognizes an S corp the same way. So let's talk about a couple of good practices. So making these smart decisions now is going to save you in the long run. So again, opening as a sole proprietor and trying to convert to an LLC, it's probably not that hard, but it would have probably been best to reduce the liability, reduce that risk by just starting with the LLC to begin with. Real quick, we didn't mention that an LLC you can tell the government you want to be taxed as an S corp. So essentially, you can convert your LLC to an S corp. It's not technically a conversion, but you can be taxed as an S corp. So that is an option if you start with an LLC, and then maybe in a couple years you make over the $40,000 a year in profit that you would take home. You can convert over to S corp style taxation. Let's see. Best practice again is separating your finances. You just don't want to mix your personal finances and your business finances. There's a lot of things you can write off in your business from your personal expenses. So again, not a tax attorney or anything like that, but realistically, if you're using your home internet as your source of internet, you can usually write off your home internet cost on your business. So your business credit card will go on the account, and you'll pay for your internet through your business credit card. Again, you really want to keep as much personal as business. Last thing you want is the government to be questioning, why do you have a $25 grocery store purchase on your business credit card? Can you justify this? And you're like, well, I just didn't have enough money on my personal credit card, so I put $25 worth of groceries on my business. It's not worth it. Just best practice, just keep them separate from the beginning. Next, you should probably get business credit cards. Again, especially if you're an LLC or an S Corp, we recommend something like an Amex Plum card is great. Capital One is an easy one to get, but you got to watch out. The Capital One Spark card is a great business card, but it is tied to your personal credit, so you don't necessarily want that. You start charging up high balances for products, and that high balance is going to be reflected on your personal credit card. So a true business credit card is the best way to go, and you just watch for the terms and conditions of each one, whether or not they're going to apply to your personal credit as well. Next, we'll talk about your business address. So you are perfectly fine using your home business address. It's probably not recommended. While it's a little paranoid, I mean, it probably won't happen, but when things go bad, some person gets upset about something on Amazon, you sent them a broken this or that, they can look up your company on Amazon, they can look up your company on your state's website and find out where your house is. And maybe they're going to come visit you. Very unlikely this will ever happen, but why take that risk? For a fairly cheap amount, you can get a UPS box or a virtual address through an office company, $20 to $50 to $100 a month, depending on where you live. It's fairly cheap and, in my opinion, worth having your registered business address at a professional business address. You can also use what they call an agent on record. A lot of these lawyers and CPA offices that register entities for people can offer you this service, and you'll pay them yearly. And what happens is their business address becomes the business on address, and the business contact will also be the law firm or the CPA firm that registered your corporation for you. It just kind of puts your personal name and address behind a wall. Like I said, for the cost, it's probably worth its weight. Let's see. Yearly maintenance. It's very important that you actually have maintenance of your corporation. So what does that mean? You need to act like a business. So a proper business will have meeting minutes about their meetings. They'll have filed paperwork, file your taxes, do everything that you need to do properly. It's very important. There's a great video from Mark Kohler that talks about your corporate veil. And again, it's that kind of like a shield that protects you from your business. And what happens if you don't do these business filings like you're supposed to? You don't record your meeting minutes to show people you are a real business, that you're treating it as a business. The government can say you're not a business. So act like a business, file your paperwork so you don't end up getting personally liable for any issues. It's very simple. Again, CPA firms and law firms offer this service, probably $150 a year. Again, not sponsored by Mark Kohler. We love him to death, though. Maybe one day we can get him to come on our show and talk about this. But we pay them $150 per year for every business that we have, just to maintain our records, just to maintain that we have everything that we need to. Our compliance is good. It's a very cheap cost when you look at it, $10 to $15 a month to ensure that you don't have any legal risk. So let's talk about where we are now. Let's talk about the conclusion here. So the things you really need to take away from this. You need to understand what your goals are as far as your business. Is this a side income? I'm just going to do a little bit of business. I need a couple $100 a month in extra cash flow. Or is this is an escape from my day job? I hate my day job and I want to do this full time. I've seen plenty of other people on YouTube be successful. I can do that too. And that will kind of help you determine where you need to be as far as an entity registration. Again, we don't feel like a sole proprietorship is a good idea. We really think an LLC by bare minimum would be the wisest idea, as well as corp filing. So figure out what you want to do, what your goals are, and then go from there. you should really consult a professional just to make sure you're getting solid advice, you're making a wise decision. These upfront costs are not fun, especially being a very small business, especially if you're doing this on the side, spending hundreds of dollars setting up all this stuff. It's very costly, but when you look at the benefits long term and to keep yourself safe, it's totally worth its money. So real quick, we'll talk about the actual places to register. So you can register your business yourself. You probably will have a difficult time because you need to have all sorts of corporate bylaws and structure, stock certificate formation if you're doing an LLC or an S Corp. All this stuff can be done by a professional service. LegalZoom is out there. Again, it's a DIY service. It's $100 for the service, I believe. It might have gone up a little bit, plus whatever your state filing is. So here in Texas, using LegalZoom, I believe it'd be $450. $350 goes to the state of Texas. $100 goes to LegalZoom for their work to help you through the process. For a little bit more money, you can usually find a CPA or a local lawyer that can help you go through the registration process, get a little bit of advice along the way, make sure you're doing a good job. Might cost you $200 to $400 more to make sure you're making this right decision, but it's always wise to have a good legal and wise professional that can help you make sure you're making the right decision. So we think, again, we pay for all of our corporations to get set up by a professional. We've done this a few times, and we have a pretty good feeling of what we should and shouldn't do. But again, it's especially if you're new to this, it's probably worth it. Even as experience we have, I think I have 4 corporations set up. We still pay a lawyer to do it every time. So every state does things a little bit different. So you need to understand what your state's regulations are, or maybe you're going to file for a corporation in another state. If you're a foreigner that's trying to do business in the United States, you would have to choose a state to register your company. Every state might have an advantage or disadvantage. You're going to see a lot of information out there automatically register in Wyoming or Nevada because you get they shield your identity and blah, blah, blah. But that might not be the best idea. It might be one of the most expensive ideas to do. And so, again, a legal professional is by far the best thing to do. California makes everybody's life difficult on almost everything. So you might avoid California if possible, even if you're in California. So if you're in California, again, I think this is well worth it to talk to a lawyer because the state tax ramifications can be quite high. And if you can avoid that, that'd be great. So we're going to put some links in the description below to Mark Kohler and some great information that he's put out. Mark Kohler, again, is a CPA and tax attorney. He's got a whole bunch of credentials behind his name, and he's been doing this for a long time. We personally have used the company multiple times. Again, no affiliation to him at all except good service. We've been happy. He's got a lot of great information. Even if you don't use it, it's free. So you might as well check him out. And this is video number 1 of our series of getting started to sell on Amazon. So click the subscribe button down below if you want to keep up and learn more. We're going to have an entire course that will be completely for free. Where you can skip the thousands of dollars that other people are charging for it, and we will give you all the information you need to be successful right here. All right. Thanks, everybody.